So today we will hear from Skyharbour Resources, and that includes Jordan Trimble, the CEO. And during today's webinar, Jordan will provide us with an overview and an outlook, and then we'll take some questions. You can type in your questions into the chat box at any time. We'll get to as many as we can. Before we can kick things off, first we need to go through the fine print. So during today's webinar, forward-looking statements may be made. I would direct listeners to the forward-looking statements outlined on page 2 of Skyharbour's corporate deck, which we'll see momentarily. You can also find it on the company's website, skyharbourlimited.com, and Skyharbour being spelt out with an O-U-R at the end. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Skyharbour Resources. Now, before we kick things off, we usually like to touch on the macro side of things ahead of these webinars. But, I've heard Jordan speak before, and he'll probably do a much better job at covering the overall uranium sector. So I'll keep it brief here. With the disinvestment in the uranium sector, there's been a lack of exploration and a lack of discoveries. New mines will be needed in the coming few years to replace mine closures, let alone cover the growth in uranium demand. We think maybe current prices near $48 a pound could help, but we suspect that incentive prices for developers and producers to flick the switch is likely higher. Bottom line, we still like the potential for uranium fundamentals to drive uranium prices higher. We think there is a paradigm shift in energy going on. More and more countries are growing more accepting to nuclear power as a reasonable low carbon source of energy. In fact, just yesterday, the EU voted to classify nuclear as green energy. And we think this growing acceptance will eventually affect the upstream side of things and should bode well for companies like Skyharbour. With that, Jordan, I'll now turn it over to you.
Great. Well, thanks, Kobe. Great introduction. I appreciate you guys hosting us today. And firstly, thank you, everyone, for tuning in. I know it's the middle of the summer. For those of you out east, looks like it's pretty good weather. We've been having a typical Vancouver rainy, cloudy, wet summer thus far. But again, thank you very much. I'm very pleased and happy to bring you an update on the company. For those of you that follow Skyharbour, you'll know we are a high-grade uranium exploration and early-stage development company in the Athabasca Basin. Had a very, very busy start to the year. So we just announced a major transaction and property acquisition with Rio Tinto, new project called Russell Lake, tied on with our existing flagship Moore Lake project. We've just completed with our partner companies 12,500 meters of drilling, assays pending for all of those various drill programs across 4 properties, including, again, Moore Lake, our flagship, where we just finished 2,500 meters. So near-term catalyst coming up. But most importantly, we're really just getting started. The remainder of this year and early next year, we're going to embark on our most aggressive and largest exploration and drill campaign ever. Along with our partner companies, we're going to carry out our first drill program at this newly acquired Russell Lake, continue to advance more, and have our partner companies advance the secondary projects. We're also in fairly advanced negotiations on additional option and joint venture partner companies at some of our other projects. And the market has been very receptive to these deals over the last several years, again, for those of you that have been following along. So just as a quick snapshot, as I mentioned, we are a high-grade uranium exploration early-stage development company in the Athabasca Basin. For those that do not know the Athabasca Basin, it's the highest-grade depository of uranium in the world. It's ranked the #2 mining district by the Fraser Institute. We've been around for 10 years, so we haven't just shown up here in the last few years. We were there through thick and thin in 2013 through 2017, building this asset base. 15 projects, 1.1 million acres of ground, I believe now the 4th or 5th largest land holding in the region. We have projects ranging from earlier stage exploration properties as a part of our prospect generator model, right through to more advanced stage exploration projects and assets like our Moore Lake project, Russell Lake, and South Falcon Point that we're actively advancing, exploring, and looking to deliver a new high-grade uranium deposit and discovery in the Athabasca Basin on. We have a number of strategic partners now. Denison Mines, they're a large corporate and cornerstone shareholder of Skyharbour. Rio Tinto will become a very large shareholder with this Russell Lake acquisition, and we are project partners with Orano at our Preston project. So I'll make my way through the slides here, and I do want to leave some time for some Q&A. We did this presentation a couple weeks ago. For those of you that tuned into the uranium conference, it was very quick, and we didn't have a whole lot of time for Q&A, so I will leave some time for that. So starting off with investment highlights and really the three core pillars of the company: people, timing, and projects. So the people, including the management team, the board of directors, strategic and larger shareholders, and some of our partner companies, as I mentioned previously. Timing with the uranium market. I'm sure most of you tuning in here are uranium bulls. Obviously, we're in a bit of a pullback right now, but I do believe we are still very much in the early innings of a sustained uranium bull market. Projects, as I mentioned, one of the largest land positions, projects ranging from earlier stage to more advanced stage exploration assets that host resources, that host deposits. That's a key differentiator with Skyharbour in the Athabasca Basin relative to our peers. And a dual-pronged strategy. First and foremost, we do offer that high-grade exploration and discovery potential at our flagship and core projects, but we also act as a prospect generator, bringing in partner companies to advance our secondary projects. So I'll start with the people, familiarize everyone with who we are. So I started running the company in 2013. I come from an entrepreneurial and finance background, CFA charter holder, sit on the board here in Vancouver. I was doing corporate development for a gold company called Bayfield Ventures, which we ultimately sold to New Gold in 2013 and 2014. That's when we started Skyharbour Resources. My chairman, Jim Pettit, who's been in the industry for over 35 years, we saw an opportunity to go in as contrarians and build this company up in the Athabasca Basin, acquiring projects at very attractive valuations. Dave Cates is a very active director of Skyharbour Resources, president and CEO of Denison Mines. As I mentioned, Denison is a strategic shareholder of ours, with very close working relationship with the team there, Dave and his team. Dave's participated individually or personally in a number of our financings as well, including a small flow-through we did late last year. Joe Gallucci joined us just a few years ago. Joe is an independent director of Skyharbour. He brings a whole bunch of capital markets experience and bench strength to the team. He's now the head of investment banking at Laurentian Bank, and he's worked with a number of uranium companies throughout his tenure. Dave Billard is our head consulting geologist, really oversees everything operationally and in the field. So Dave comes to us with over 40 years of experience. He was at Cameco for a number of years as a senior geologist. Prior to that, he built and sold a company called J&R Resources. Some of you may be familiar with J&R. It ran from a $5 million market cap north of $350 million in 06 and 07. He's really worked in the basin his whole career, credited with a number of discoveries. And they ultimately sold J&R to Denison Mines in 2013. And so you can see it's come full circle here with our relationship with Denison and Dave leading the charge at with our technical team. Christine McKechnie joined us about 5.5, 6 years ago. She's now our senior project geologist. Again, cut her teeth at Cameco for a number of years, worked at J&R and several other uranium exploration and development companies. She wrote her award-winning thesis on one of our deposits, the Fraser Lakes Zone B deposit at our South Falcon Point Project. So she really has an intimate knowledge of these projects that we have in our portfolio. And rounding out the team, Paul Matizik joined us as an advisor in 2016 and a large shareholder. Really needs no introduction. He's built and sold a handful of mining companies over the last 15 years, including a uranium company that he sold for $1.8 billion in 2007, Energy Metals, which he sold to Uranium One. At the end of the day, Skyharbour here, that's what we're looking to do. We're looking to be acquired. We want to build this company up as the uranium market continues to march higher and hopefully on the back of exploration and discovery success, and ultimately look to sell the company. Andrew Ramcharan, our most recent addition, he's now our Senior VP of Corporate Development. He's got a PhD and an engineering background, 20 years of experience in the mining industry. He was a corporate development manager for IM Gold. And prior to that, he worked at SRK Consulting, where he worked with a handful of uranium companies in the mid-2000s, including Uramin, which ultimately sold to Areva, now Orano, for $2.5 billion. The capital structure, straightforward, 133 million shares issued and outstanding. We're trading between a $40 to $45 million market cap. One note on that, obviously, we have seen this recent pullback in the broader markets and certainly in the uranium equities. There's clearly now a disconnect between the uranium price and the equities. I've been actively purchasing shares in the open market. You can see with my insider filings, as have other insiders. I really truly believe this is the best value proposition this company has ever offered, given what we've built the company up to be, and more importantly, what we have going forward. We're cashed up, $5 million in the treasury right now. We do have option payments coming in to the tune of about 1.4 million later in the year from partner companies. So that's in cash and stock. And going forward over the next several years, based off of these earn-in option agreements, we have between $1 million to $1.5 million coming in annually. Notable and strategic shareholders, management and insiders, as I mentioned, we've been actively adding to our positions over the last several months here. Denison Mines, a cornerstone corporate shareholder of the company. We are in both of the uranium mining ETFs, both the Sprott and the Global X ETFs. And then you'll see some of the institutional shareholders and investors that have been there, in particular when we've been raising money over the last several years. So we've cultivated a real good institutional shareholder base and corporate shareholder base. Rio Tinto will be added to this list shortly once that Russell Lake property acquisition closes in the coming weeks. So I'll quickly work my way through these slides. There's a lot of information here, and Kobe covered a little bit of it, and I'll leave that if you want to go through it in more detail to the Q&A. But just a couple of I think key topical points here. So nuclear energy, uranium being the fuel for nuclear energy, we've seen the sentiment improve drastically over the last several years. Nuclear, again, for those that aren't familiar with nuclear energy and the benefits of nuclear energy, it is the only source of baseload 24/7, clean, affordable, scalable, and reliable electricity generation. It's absolutely imperative that we expand our nuclear capacity globally if we're serious about decarbonization objectives. The world is finally waking up to this and waking up to the simple fact that nuclear is at the nexus of two major mega trends globally right now. One, electrification. We're seeing the demand for electricity increase. We're going to need about 50% more electricity by 2040. And hand in hand with that, clean energy. So nuclear satisfies or falls into both of those buckets. We need more electricity, and we need it to be clean. So you'll see here on the next slide, and this is certainly topical right now, given the vote that we saw in the EU Parliament just yesterday or the day before. So we now have nuclear as a clean energy. They just voted down an objection that would prevent nuclear from going into the EU sustainable finance taxonomy. So this really paves the way for ESG investors to come in and fund nuclear projects and developments in the EU. On the next slide here, the uranium market, the fundamentals. So as I've said in previous presentations, this really, I think, is the most compelling underlying fundamentals for any commodity out there. So you've got a major supply deficit that's formed over the last half a decade. We now have about 190 to 195 million pounds of annual demand, and that's in the backdrop of about 140 to 145 million pounds of primary mine supply. So we've seen that major supply side response play out over the last 5 or 6 years. We've had to continue to draw down inventories, and we're simply running out. You'll see at the bottom here as well, uncovered utility demand. So this is important. We are now in the early days of a new utility procurement cycle, new contracting cycle. Historically, this has been the biggest driver for this metal is utility contracting and buying. We've seen now over the last 6 or 7 months a number of major new contracts signed, Cameco having announced significant contracting activity earlier in the year, and just recently the Chinese have signed a contract with over $60 a pound uranium. So I think, continue to see this over the coming years, and I think this will be one of the main catalysts for a much higher uranium price going forward. Moving on to what's happening globally. So a couple of key points here. One, on the demand side, China is really still at the forefront of demand for uranium, and with their growing nuclear fleet, planning to build 150 nuclear power plants in the next 15 years. That's more nuclear electricity generation coming on in China alone than has come on globally in the last 35 years. So look for the Chinese to continue rolling out these nuclear power plants. We all know what's happened in Russia and Ukraine. So this is more on the supply side, where Russia really does have a stranglehold, especially on certain parts of the nuclear fuel cycle, including enrichment. But they do represent a significant amount of primary mine supply, and it will be interesting to see what happens with the Kazakh production going forward. Kazakhstan represents over 40% of primary mine supply. But bottom line is, Western utilities are carving out Russia as we speak. They're self-sanctioning. And when you look at the East versus West, these now really bifurcated markets, there's a serious supply-demand imbalance in the West. The West simply is not producing enough uranium, and it's still consuming a lot. And so that's where I think companies like Skyharbour and companies in Canada, the US, and Australia stand to benefit going forward. And last but not least, the US here, for the first time in over 50 years, the nuclear energy industry has bipartisan support. The US is still the largest consumer of uranium globally, with just under 100 reactors, and they're heavily reliant, or have been heavily reliant, on Kazakhstan, Russia, and Uzbekistan for supply, and that's changing as we speak. So again, I think these Western mining, development, and exploration companies stand to benefit. One last slide here, just highlighting some of the recent pounds that have been sequestered out of the market. I'm sure most of you are familiar with the Sprott Physical Uranium Trust having now sequestered many tens of millions of pounds out of the market, along with Yellowcake and some other holding companies. We've also seen producers and developers that have been buying material. So it's really just tightened up this market, in addition to mine depletion into resources and reserves running out at various operations. And as Kobe mentioned, underinvestment. We just simply don't have this new bountiful amount of primary mine supply coming online, much like we did in 06, 07, when the price took off. We had Kazakhstan ramping up, you had Cigar Lake ramping up. You simply don't have that over the next several years. So this is all, I believe, going to create an environment where we will see, I think, much, much higher uranium prices. And one last note on this is we are starting to see the underfeeding environment that we've been in, a source of secondary supply, transition to overfeeding. And by some estimates, this could be a 30 to 40 million pound swing in the underlying supply demand fundamentals for this commodity. So that's a massive amount that we could see swing over the next several years. Moving on here, I'll move ahead to this slide before we get into the project portfolio and map of the basin. I do want to highlight this. So uranium exploration in the Athabasca Basin, it is, as I mentioned, the highest grade depository of uranium in the world. You'll see the chart of several notable and successful discovery stories here at the bottom. NextGen, Fission, Alpha previously, Hathor, more recently IsoEnergy. And the reason we have this up there is important to remind people what we're going after and the kind of return potential that these high-grade Athabasca Basin discoveries generate. So at Skyharbour, we are looking to be that next big high-grade discovery story. We do have existing high-grade zones of mineralization, as I mentioned earlier, but we do feel like we have the potential at various projects to find that 50 to 100 plus million pound high-grade traditional Athabasca Basin deposit. So that's really the prize at the end of the day. And as you can see with these charts and with the kind of value creation with some of these stories, it's significant. And that's why people like to invest in Athabasca Basin exploration companies. So here you have the project portfolio. As I mentioned earlier, one of the largest project portfolios in the Athabasca Basin, totaling over 450, almost 460,000 hectares across 15 properties. You'll see most of the projects are concentrated on the eastern side of the Athabasca Basin, proximal to mining infrastructure. So you've got our Moore Lake project, which is the flagship for the company. It's the project that we've been actively advancing and drilling over the last 6 years. Our newest acquisition, Russell Lake, which is tied on with Moore Lake. So it's adjacent to the west of Moore Lake. I'll talk more about that later on in the presentation. And then our South Falcon Point Project, 100% owned, hosted the Fraser Lakes Zone B uranium deposit right at surface, pounds in the ground at this project. So these are the three core or more advanced stage exploration assets in the portfolio. We have another dozen or so projects, as you'll see, scattered throughout the Athabasca Basin, 5 of which we've entered into partnerships, either joint ventures or option partners on these projects. And so this allows us the bandwidth to go out there and focus in on our core projects while we have partner companies advance and fund these other secondary projects. So moving on to the specific projects, Moore Lake. Again, for those of you that know Skyharbour, that have been following our news flow, you'll know this project very well. Really, it has been the focal point, the crown jewel for the company over the last 5.5, 6 years. We acquired it in 2016. We started drilling it in 2017, and right away we had significant high-grade drill results, including 21% U3O8. Over 1.5 meters. That was within 6% over 6 meters. We made a new discovery in that first year at what's called the Maverick East Zone. We drilled 9% over just under 1.5 meters. But what's interesting about the project was when we acquired it and our initial drill programs, most of this work was focused on relatively shallow sandstone and unconformity hosted uranium lenses or zones of mineralization. Not a lot of work had been carried out on this project looking for deeper basement hosted targets. And so what we've done in the last several years is kind of shifted our focus, if you will, in particular at this main Maverick corridor. It's a 5-kilometer long conductive corridor. Only about half of that's been systematically drill tested. But we've shifted our focus to looking a little bit deeper into these underlying basement rocks. And again, for those that have been following the news, you'll know that we announced our highest grade basement hosted drill result ever at the project late last year, at 6.8% U3O8 zone over 2 meters. That was within a broader zone of mineralization. It's open down dip and down plunge. We do believe there is a much larger, higher grade deposit at depth. We're going to continue exploring and drilling for that. We think we've maybe just nicked the edges of it. We have just completed a 2,500 meter drill program, assays pending. We're very, very pleased with what we've seen, and we're keen to get back out there and get the drill rig turning here later this summer, early in the fall. One last note with this project is it is a big property, so it does have about a dozen other regional targets outside of the Maverick corridor that have been drill tested, that have mineralization. So there's a number of other highly prospective targets at the project. So this has really been the focus for us. But going forward, it will be a co-flagship project with this newly acquired asset called Russell Lake, and you'll see here the location of Russell Lake. This is the project we're acquiring from Rio Tinto, as I mentioned earlier. You'll see the location, very, very strategic. So this is a property that we had been looking at for the last several years. We've been in negotiations for well over a year. We finally got the terms that we wanted on this project, and have Rio Tinto now as a large shareholder and potentially a project partner going forward. It's a big property, about 73,000 hectares, adjacent, tied on with our existing flagship Moore Lake project. You'll see here, it's all the ground to the west of Moore Lake. But you also have a couple of other notable assets and properties proximal to it. So to the north, you have the McArthur River mine, the richest uranium mine in the world. To the south, you have the Key Lake, one of only 2 operating uranium mills in the basin, the Key Lake Mill. And then to the west here, you have Denison's flagship Wheeler River Project. Their Phoenix deposit is less than 2 kilometers from our property boundary. And you can see the claims here wrap around the Wheeler River Project on the western on the western extent. So a very strategic asset, large property. You'll notice this road that services the McArthur River mine that runs up through the western claims of this property, along with the power line that powers the mine. And we also, along with the road and the power line, we are inheriting a 40-person exploration camp, state of the art, that Rio built several years ago. So that's a significant new asset for the company. That'll bring down our drilling and exploration costs, both at Russell Lake and at Moore Lake going forward. We can drive, our geological team can drive right up from Saskatoon to this camp. So again, a very strategic acquisition. Now, as far as the earn-in goes, you'll see here, very manageable initial 51% earn-in at this project, some cash which has been paid, shares which are being issued, as well as a what works out to net 5.1, just under 5.2 million in exploration expenditures over a 3-year period. We do have an initial $2 million program that we are planning right now. That'll get us between 5,000 to 6,000 meters. The project, given that there is a road running through it, is accessible all year round, so we can work and drill there all year round. We will have some news flow on additional details on this upcoming drill program. And we will be co-advancing Russell Lake along with Moore Lake. So when we're carrying out the drill program, we will be drilling both projects. We'll be staging out of the camp at Russell Lake. So again, it really was an important acquisition for us, and fit very nicely in the existing portfolio. Just one last note on the previous exploration and discovery potential at the project. So this is an advanced stage exploration project. It's had many drill holes in drilling, most of that being historical in nature. So really not a lot of exploration and drilling carried out in the last decade. And that's important to note, because if you look at some of these recent discoveries, particularly look at an ISO Energy or some of these other companies that have made basement hosted discoveries in the last 10 to 15 years. In a lot of cases, they've gone in to historical projects that had a lot of data, that had a lot of geological information that they could sift through. And they went in there with some new ideas, some new geological modeling, and they were able to find that high-grade deposit, standard big high-grade Athabasca Basin deposit. We think we can do that here at Russell Lake. We've, as I said, we've been looking at this project for several years. Our geological team knows it well, and we think within the first few drill programs, we will deliver a major new discovery. So if you look here, some of the historical results, there is high grade in historical drilling. You'll see multi-percent mineralization over skinny widths. So it's there are zones that do host high grade mineralization. We think maybe these holes were close to intersecting higher grade zones over longer widths, and that's something that we're going to be testing for with this upcoming drill program. So just wrapping up this section, again, this is a major transaction and development for Skyharbour, a very strategic acquisition, and you will see news flow in the coming weeks and months on the drill plans and the exploration plans at this project, which will commence later in the year. South Falcon Point, so this is a project that we own 100% of. It's a project that hosts an NI 43-101 inferred 7 million pound uranium resource right at surface. It is lower grade at 0.03%, but again, right at surface. There appears to be, from some drilling we carried out several years back, higher grade mineralization below that resource. So that's something that we would like to test or have a new partner company test for us. You'll see there's a number of prospective corridors on this conductive corridors on this project that are mineralized, that do host the potential for additional discoveries to be made. It's a project that we've just completed some geophysical work and groundwork on, really looking to package this up for a major drill program. We have had quite a bit of interest on this from potential partners, so do keep an eye out for a new option or joint venture partner coming in on this project at some point this year. So moving on to the prospect generator side of the business, this is an important slide. This really provides the snapshot of the prospect generator side of our business and the partners that we've been able to bring in. So you'll see we now have 5 partner companies at our various secondary projects. Orano Canada, industry leader, France's largest uranium mining and nuclear fuel cycle company. They have spent now $5 million, just under $5 million, to earn in a 51% stake at our Preston project. Azincourt Energy has now completed their 70% earn-in at East Preston, having spent a few million in exploration and making some cash payments and issuing us some shares. Very excited with the progress they're making. They've completed now a 5,000 meter drill program with assays pending. They've announced intersecting radioactivity in the core. So we're really excited to see what the numbers come back as. I really think they've had a breakthrough at that East Preston project with this recent drill program that they've just completed. And then the bottom 3 companies, Valor Resources, Basin Uranium, and Madero Mining. These are all relatively new option partners. So these companies are still in the earn-in phase of those earn-in option agreements. So they're still spending the money, funding all of the exploration at these various projects, paying us cash on an annual basis and issuing us shares as well. You'll see the numbers there at the various projects. All of these companies have just completed either drill or field programs recently. So assays pending from those programs. As I mentioned earlier, we've got about 12,500 meters of drilling core with assays pending, soon to come out here over the coming weeks and months. So the total amount of exploration expenditures you'll see here potentially funded by partner companies is just under $20 million. Cash payments of potentially over $10 million and share issuances over the coming years that amount to between, depending on market conditions, $10 to $50 million. It's a significant amount of capital and money coming in to Skyharbour Resources. It also allows us to focus our time, money, and efforts at our core projects, Moore Lake, Russell Lake, and South Falcon Point, and have partner companies come in and fund the work and advance these other projects. Shareholders of Skyharbour get exposure to these other companies through our equity holding in these companies, and we typically structure these earn-in options whereby Skyharbour retains a minority interest in the project, and that's important because the way that we look at this is we want to have multiple irons in the fire or shots on goal. We want to have exposure to several projects that could deliver a new major high-grade Athabasca Basin uranium discovery. And with these partner companies, you get exposure to 5 different projects that are being actively advanced by these partner companies, in addition to our core projects on the east side of the Athabasca Basin. So I won't spend a lot of time here because I do want to hand it over for some Q&A, but just to wrap up here with upcoming catalysts, what do you have to look forward to? Why Skyharbour? Why now? As I mentioned, assays pending from our collective largest drill program and campaign ever. As I mentioned, we are going to be embarking on what will be likely an even larger and more aggressive drill campaign between us and our partner companies between now and early next year. Included in that will be drilling at Moore Lake and at our newly acquired Russell Lake project. Keep an eye out for news flow from our partner companies as well at on these various other projects as they continue advancing and unlocking value at these various projects. Also look, as I mentioned, for additional option and JV partners to come into the fold. We have several other 100% owned projects that we've had expressions of interest on. And like I've said earlier, the market has been very receptive to these new option and JV partners coming in. And last but not least, the uranium market. For those of you, again, that have been following the story, you'll see we have traded in lockstep with the market. When the uranium price is moving higher, as a smaller cap company, we do provide that extra torque or leverage. And I do think, again, this pullback aside, we are still very much in the early innings of what will be, I think, a prolonged bull market for this commodity. And we really there aren't that many uranium companies. We've talked about this in previous presentations over the years. We have seen some new companies come into the fold, but if you look at the relative valuations today compared to where they have been in the last 20 years, there's a lot of runway ahead of us. So with all that being said, I'd like to hand it over. Again, I really appreciate everyone taking the time, and feel free to ask any questions. If you have any comments, I'm all ears. Thank you.
Great. Thanks, Jordan, for the informative presentation. So yeah, we'll now get started with the Q&A portion. Just a reminder that you can type in your questions into the chat box at any time. And we already do have a few questions here. Some are overlapping, and I think you've answered some of them in the presentation, but it never hurts to reiterate the key points. So we'll kick it off with some questions on the macro side. So if the current cycle continues to improve as expected, what will be the biggest pinch points to come? Will it be securing experienced labor, cost inflation, or something else?
Yeah, it's a great question. I mean, look, costs. Okay, so cost inflation, specifically in our industry. I mean, I brought that up when we were covering off the Russell Lake slides. We have seen cost inflation in the field, exploration all the way up through producers. However, whatever we can do to combat that. That was a part of our reasoning behind the Russell Lake acquisition. It comes with the camp, the road, the power lines that will bring our costs down, both at Russell and at Moore. But that is something to look out for, obviously, over the coming years, right? It's something that companies are now obviously well aware of and will have to fight. So that's with regards to cost inflation. Now, the questions. Did you want me to talk about the macro side of that as well, or?
If you could tie it in there and you have something if there's a thought on your mind that pertains to that, then sure. But I mean, I think you've answered the question.
Yeah, I mean, well, if we're talking about cost inflation with regards to the nuclear industry, I mean, look, it's obviously there will be some cost inflation, but I think as a side note to that, this does bring up an important aspect of nuclear energy generation, and so obviously cost inflation. If you're a natural gas or coal plant operator, cost inflation, and particularly the cost of the input and the fuel has gone up drastically, as we know, right? And that has a major impact to the bottom line of those utilities, of those operators. Nuclear energy, for those of you that are familiar with it, know that the fuel cost, the cost of uranium's a relatively small amount of the cost of the reactor. And so that's where you get, you can have cost inflation. Let's say it's cost inflation with the fuel, with the uranium price, which is what, as on the mining side, we're all hoping for, right? We want to see that uranium price move higher. It's not going to deter nuclear fuel buyers from buying uranium. So that's one of the reasons why you can see the uranium price spike as much as it can in bull markets. We saw that in 06, 07, but it's an important point to bring up.
Yeah, no, very well said. What are your thoughts on incentive prices? I keep hearing people talk about it, and I hear numbers thrown around. A few years ago it was 50, then I heard 60, and now I'm hearing 70. Do you think there is a certain incentive price when producers will flick the switch?
Yeah, I mean, the incentive price is obviously project specific, but when we talk about, let's say, an all-in average cost of production or incentive price, no question that's gone up, right? Again, talking about cost inflation, that has increased. I'd peg it between $60 to $70 when you're looking at an average all-in cost globally. That's why it's important to be operating in relatively low cost and safe jurisdictions, which is very much what the Athabasca Basin provides, right? But yeah, no, look, that incentive price is creeping up. There's no question about it. And the current price at $50 a pound, or just under $50 a pound, would be below that incentive price. So we will need to see that price move higher.
What about incentive prices to actually do the exploration? How do prices dictate how much drilling a company is going to do?
Yeah, no, that's a really good question. I mean, we've having been doing this now for 10 years, and starting the company when the price of uranium was declining post Fukushima from $70 down to the low of 17, and now we've seen that trend reverse. We've kind of seen a number of different price environments. As far as the exploration is concerned, I think taking a step back, that is the reason why you look for uranium. That's why you explore for uranium deposits in the Athabasca Basin, because even at relatively low uranium prices, it's still very, very lucrative to find a deposit. And NextGen, Fission, some of these other companies that made discoveries through a declining uranium price environment proved that, right? They showed that, yes, you can go out there, even when you have a $25, $30 uranium price, you can generate hundreds of millions of dollars of return, even billions of dollars of return for investors. And so, in the Athabasca Basin, you do have a little bit of insulation, if you will, from declining uranium prices, because the deposits are so rich, they're so high grade, they're low cost. As you see the uranium price increase, as we're seeing right now, and I think as we will continue to see, what that does is it does potentially bring online or make interesting some of these lower grade deposits, right? And so, a good example then specifically for Skyharbour would be our Fraser Lakes Zone B deposit. At $25, $30 uranium, it was pounds in the ground, but lower grade pounds in the ground, much less interesting. As we see $60, $70, $80 uranium, those pounds become quite interesting, right? And so that's what you will see here over the coming years, as we see that price continue to move higher.
Right. Okay, and I want to circle back to the Athabasca in a bit, but before we get more into the project specific questions, I want to get to know you a little more. So when you took the reins, if I'm not mistaken, you were the youngest CEO of a mining company. So, what's your story here? How did you get into mining, and why did you switch over from gold to uranium?
Yeah, well, starting off with the gold company, so Bayfield Ventures, that's really where I cut my teeth, started my career. It was 2010 was when I started working with the company, with Jim, who was running it, and we were fortunate enough, one, to have a good market back then, but two, we also had a discovery that turned out to be the extension of a fairly major deposit, the Rainy River deposit, which is now a producing mine. And so I was able to watch the kind of wealth and value creation associated with high grade mineral discoveries in Canada. So I was very much hooked at that point. I was commodity agnostic, to be honest. It wasn't like I was a super gold bug, but watching that company grow as it did, and then ultimately be acquired by a larger mining company was quite exciting, and a good way for me to start my career. And when we were in the early days of being acquired, knowing that, okay, yeah, this is coming to a head here. Skyharbour at the time was really just a vehicle with some legacy assets, and we went out there and we saw a contrarian opportunity in the uranium industry. Post Fukushima, black swan event, this commodity had been more or less crippled for the better part of the last several years. We might have been a little bit early, with the metal itself, but at that time in 2013, we also were watching a number of notable new discoveries in the Athabasca Basin. So there was a combination of us seeing a contrarian deep value opportunity with uranium, coupled with some of these new major discoveries like NextGen and Fission, and prior to that, Hathor and a few others. And these were discoveries that were being made using some new techniques, using some new geological thinking. And so you kind of had this, not flurry, but you had a number of new discoveries, that high-grade discoveries that had been made in a relatively short period of time. So that really kind of drew me in. And we went out there in the early days. It was difficult to raise money, especially as the uranium market was declining and as the kind of the broader markets, mining markets, were declining as well. But we had some good backers early on that helped fund us, and we were able then to start building the portfolio that you see here now in Skyharbour.
Great. Okay, so lots of questions here. I do want to circle back to the Athabasca. Was it more so the geologic potential, or was it more so the low political risk in Saskatchewan?
Both. Yeah, both. The geological potential's unmatched, needless to say. I mean, the grades are 10 to 20 times the average grade. But more and more so now, the geopolitical landscape there, number 2 mining district as ranked by the Fraser Institute, that's becoming much more of a prominent criteria for investors with these companies, and for companies that are actively advancing projects and developing projects. So a bit of both.
Sure. And, with all that said and all the great things about the Athabasca, would you ever consider looking outside of it?
We have. We look, we're always looking for projects. I mean, that's how we built this company, right? Was being opportunistic. And so we always are keeping a watchful eye, but I can say on no uncertain terms that really, the Athabasca Basin is the best place to be exploring for uranium in the world, for all the reasons that we've just outlined. So, it'd have to be a very compelling project and deal, but it's not to say that we wouldn't. But for the time being, right now, yes, we are very much 100% focused in the Athabasca Basin.
Right, and you guys are taking the project generator approach, but you're a special type of project generator in that you're kind of a hybrid model. So, tell us, what is a project generator? How does your business model differ to some of your peers, and maybe what are the benefits of using it?
Yeah, so we do have a hybrid approach, and I think that can get lost sometimes. We are offering investors exposure to high grade discovery, 100%, right, at our core projects, and we are out there on a daily basis looking to emulate the success that other notable discovery stories have had in the basin over the last 15 years. But given the size of the property package and the number of properties that we've amassed over the last decade, it made a lot of sense for us to start farming these out, optioning these out. And so it provides, I've outlined a few of them, but it does provide a long list of benefits. Obviously, the cash and stock coming in from these partner companies helps us fund our focused exploration at our core projects. It also again provides multiple shots on goal, right? A lot of times you can go and you can work on one project and you may not find what you're looking for. So it's good to have a plan B, good to have a plan C, good to have a plan D. And so these other companies are actively advancing these projects. They're offering us and our shareholders potential exposure to a new major discovery. And it's also important too, because mineral tenure in Saskatchewan, the claims, you have to spend money on them, right? There's lots of companies that have big property packages, but if they're not spending exploration dollars on them, eventually those claims will lapse. So this is a good way for us as well to maintain the portfolio of projects that we have. And last but not least, we also benefit with collaborating with these other technical teams and geological teams. So we have, I think, one of the strongest and best exploration and geological teams in the Athabasca Basin at Skyharbour, but we also get to work now and collaborate with other geologists and technical teams, and that really has proved to be beneficial at those various projects that we've optioned and JV'd out, as well as at some of our core projects as well, right? Getting kind of a second or third opinion on what to do.
Sure, and using other people's money and resources is a great way to preserve cash while retaining upside at your non-core projects. So, Are there certain joint venture projects that you are particularly most excited about?
Yeah, I mean, it's a tough question to answer. I'm needless to say, I'm excited about all of them. One thing I will say is we've, I talked a little bit about Azincourt's 5,000 meter drill program, but Basin Uranium just completed 3,500 meters of drilling at our Man Lake project. The first drilling carried out at that project in well over a decade. Within the first few holes, they intersected anomalous radioactivity, very, very encouraging alteration and structure, clays. So I'd say that, that's impressive. I mean, these are deeper targets at that project. It is in the heart of the eastern part of the Athabasca Basin on that main mine trend. So any sniff of mineralization is, I think, a breakthrough there. So I'm excited to see what kind of results and numbers they get back from that program. They do have plans to commence a phase 2 drill program later this year as well. And then at our Hook Lake project, we've now seen Valor Resources complete their first drill program there, just under a couple thousand meters, and had some very interesting, again, radioactivity in core and mineralization. So again, waiting for the assays there. And then Azincourt, obviously, as I mentioned, the 5,000 meters at East Preston. So all three of those programs intersected radioactivity. They were finding some really good looking rock in the core. And so, again, we're waiting on the numbers, but there's no question in my mind that each one of them has made significant progress, and we're pretty thrilled to have them get back to work later this year, continue following up on those findings from these recently completed programs.
Great. So lots of fun stuff in the works. Let's move back to the Flagship Moore Lake now. So you mentioned in your presentation you guys have shifted focus away from the sandstone towards the basement. So, maybe tell us what exactly are you guys doing differently aside from maybe drilling deeper, and what's the significance of a basement hosted uranium deposit as opposed to a sandstone hosted?
Yeah, so it's just really been in the last few years that we have made this transition. Now, I think I should clear the air a little bit. It's not that we're discounting or totally getting away from the sandstone or unconformity hosted mineralization. That's still very much important to us, and we want to find more of it. We think there's more there to find. And actually, if you look at some of these new proposed mining methods in the Athabasca Basin, in particular ISR, which is what Denison's proposing to use at Phoenix, and then Sabre, which is surface access borehole resource extraction, being developed by Orano and Denison, two partner companies of ours. These are both mining methods that are quite interesting as it would pertain to the existing mineralization that we have in the sandstone at the Maverick Zone at Moore Lake. But as far as new discovery, adding pounds and finding, really like our target, we want to be going after a much larger deposit there, 50 to 100 plus million pounds. And we believe that is in the basement rocks. So what we did is we carried out some geophysics. We did some new geological modeling a few years ago and really refined these basement hosted targets that previously had not been refined. I think that's important to note. Most of the drilling historically at Moore Lake was carried out in the 90s and early 2000s, and they were not targeting these deeper targets. They really didn't have the ability to refine those targets. We now have that, and we've now made multiple new discoveries and intersected several zones of high-grade mineralization in the underlying basement rocks. And just in that last program late last year, announced our highest grades to date in these basement rocks. So we think there is a much larger deposit down at depth there, and we will continue looking for that in upcoming drill programs.
Sure. And, you drilled off maybe half of the Maverick corridor, and, you're searching more in the basement now, but you have a lot of other targets across the property. So how do you prioritize work at Moore Lake?
Yeah, it's so just on that, it's about 4.7 kilometers of conductive corridor. That's the Maverick corridor. It's only systematically been drill tested for just under, call it 2.5 to 3 kilometers. Now, most of that again is only down to the unconformity. So the basement rocks are fairly wide open across the entirety of that corridor. There's several other prospective targets along strike, a few kilometers away from the main Maverick and the East Maverick zones. And yes, those are very high priority because we know that that corridor is fertile and that it hosts high-grade uranium mineralization. So we know that the feeder zones, and that's what we're testing right now in the basement rocks, have the potential to host very high grade. We've had grades as high as 21% U3O8. They have the potential to host that kind of grade. So that's why the Maverick corridor is a high priority for us, right? But we do have these other areas on the project, in particular, some new areas like Grid 19 that haven't had much drilling, and the previous drilling did intersect mineralization. There just wasn't a lot of follow-up work on them. And these are targets that have a lot of blue sky potential. And so we have been drill testing that Grid 19 target area. We've had success there. We're waiting on the numbers from this recent drill program. We did do a little bit of drilling there along with some additional drilling at the Maverick corridor. And those will be targets that we will allocate some meters to as we move forward, as we advance the project. And one last note there is we will be co-advancing Russell and Moore Lake, as I mentioned earlier. So we've got a big program planned predominantly at Russell Lake later this year, but we will be moving the rig over and continuing to unlock value at the Maverick corridor and at the other targets at Moore Lake as well.
And I think just now you kind of answered the next question, which was about Russell Lake. What attracted you to the project, and how does it compare to what you have at Moore Lake? But I imagine it's much more than just closeology and the opportunity to explore both in tandem. There's also geologically something big there, you think?
Yeah, look, first and foremost, geologically, we believe there is a much larger, or several much larger deposits there that are yet to be discovered. It's a big property. There's over 40 kilometers of conductive corridors with coincident mag lows and indicator minerals that have yet to be properly tested. There's a handful of high priority targets that have been drilled that do host high grade mineralization. I mean, you can see where it is relative to some of the largest, richest, biggest uranium deposits in the Athabasca Basin. It's right in the heart there. So that, needless to say, I mean, that was, we could check that box right off when we really started looking at it. And then you tie that in, obviously, with its strategic location and importance and its significance in our portfolio. And that's really just the icing on the cake.
So we have a question here about it. So did Rio negotiate with others? And if so, why did Rio choose to vend this out to you?
Yeah, there were other companies interested in the project, and we were there early. Like I said, we'd been negotiating with Rio for a while. The terms initially were more cash heavy, so we're delighted and thrilled to have Rio take as much stock as they will potentially be taking as it's a staged earning. We do have a pathway to 100%. There's an initial 51% earn-in and then 70%, and then we can buy out 100% at the end of it. So there were other interested companies, but I think Rio, recognized that, obviously, our geological team knows that area well, given the work that we've done on the adjacent Moore Lake project. And, really they're looking for a company to go in there and make that big discovery. And we fit the bill there.
Okay. So we'll move on to South Falcon. So, you guys own 100%, and it's the only resource in the company, if I'm not mistaken, about 7 million pounds of uranium, 5.3 million pounds of thorium. Geophysics underway. What are the near-term goals for this project? Are you guys looking at JV, sell, explore yourself? And apologies if you already answered this question.
Yeah, no, we are doing the work, or just completing that geophysical program and some groundwork there. That's really to refine the various other targets outside of the deposit itself. We did have plans to go and drill and explore there this year, in addition to what we're doing right now. But we have had a lot of outside interest on this project. So this could very well become a project that we option out. We given it's an advanced stage exploration project. It's an important asset in the portfolio. We are going to be we're not going to be selling it at a relatively low price. So we'll make sure that it's a good deal for Skyharbour and our shareholders. But at the end of the day, the most important thing is we do want to see the project advance. We do want to see money being spent in the field. And given that we've got a fairly aggressive upcoming campaign at Russell and Moore, I think right now it does make sense to look to bring in a partner company. Again, as you see with our other option partners, we typically structure it where we take some cash. We want to have a large share position in the company, but also retain an interest in the project going forward.
Okay, and with all that said, we're going to circle over back to the strategy. So, at the start of the presentation, you talked about an exit strategy and how you hope to get acquired. So at what point do you decide to sell the company versus just vend out, your big winners?
That's an excellent question. And I mean, look, we really do believe that this uranium market has legs right now, that we are going to see much higher uranium prices. It's good to see that when the uranium price is moving higher, when the market is moving higher, Skyharbour shares are moving higher as well. So we think there's a lot of value creation that the uranium market will provide over the coming years. But specifically for Skyharbour, we do think that we have a lot more uranium we can find at our project base, right? Whether it's at our core projects or whether it's with partner companies at the secondary project. So ideally, we're looking at an acquisition of the company down the road when we've seen we've had exploration and discovery success in the field, and or the partner companies have had that, as well as a much higher uranium price. But yeah, look, that is the end goal. So we're here. We recognize that that's what a lot of investors want us to work towards, and that's what we as large shareholders in the company want to work towards as well.
Okay, and we have a question here, lots of questions. So taking all the variables into account and using current spot and known contract prices, what do you consider to be a fair market price for Skyharbour shares? And I'll just let I'll speak on behalf of Dave here. So Dave is our analyst. He has an 85-cent target on this, and I'm biased, but Dave is a very well-respected uranium analyst on Bay Street.
That's a good answer. I mean, look, it's look, obviously the share price has been fluctuating. I think there's some incredible value there right now, and again, you can see what I've been doing over the last several weeks. I do think we will see this bounce back. I think it's important to emphasize that, one, the uranium market has a very unique set of underlying fundamentals. So regardless of what's happening in the broader markets, obviously, if we see a broader equity market sell-off as we have, in the early days, we see the uranium equity sell-off as well. But I think as we see the dust settle, money coming back into the markets, it's going to see that value proposition with the uranium equities. And I do think we will see the uranium price buck the trend of the broader markets. I think we will see a much higher uranium price and money continue to come into the space. One thing I will note is if you look at the asset base that we built, if we look at what a few of these projects in 06, 07 were in JNR Resources, Moore Lake, Urchison, and Falcon Point. These were the core projects for JNR in 06, 07. Obviously, the uranium price was north of $100 in those days, so a bit of a different market than we're in now. But JNR traded, as I mentioned earlier, north of $350 million valuation. So there's with the existing asset base and the catalyst coming up over the next several years, there is a very strong re-rating potential, I think, for Skyharbour.
Yeah, I mean, Dave has your model at 0.29 times NAV. Apparently, you're trading a PNAV of 0.29, so it's cheap. And to end things now, you got the right slide up for it. So, which of these catalysts do you think are going to be the biggest drivers to re-rating your stock and getting that PNAV closer to 1.
Yeah, no, drilling is right up there between us and our partner companies. Obviously, the assays pending from the recently completed programs, but also major campaign collectively between us and our partners coming up later this year. So that'll be significant. New partners coming in. Look, the market, if you look historically when we've announced these various option deals, there's always been a move in the share price higher as a result of that. So I suspect we'll see a similar thing when we likely option out some of the existing 100% owned properties. As I said, we are in negotiations, and we have had a lot of interest from other companies. And then last but not least, the uranium market, right? We just talked about this. Look, we are I don't want to say small cap company, but we are a junior. And if you look at the landscape right now in the Athabasca Basin, UEX just is being acquired by UEC, and so there's a bit of a gap between the developers and the explorers. And so I do think as you see money come in and invest, in particular in the Athabasca Basin, that will draw dollars in to Skyharbour and some of our peers. And we do see that a bit additional torque or leverage as the uranium price is moving higher. So as money comes in, as we see the market move higher, again, putting aside the recent few months in this pullback, I think it's well oversold at this point, and that we will start marching higher. Skyharbour does provide that little bit extra torque and leverage to those rising prices.
Right, and with that, I think there's no better place to end it. So thank you, Jordan, and thank you, Skyharbour Resources, for that.
Yeah, thank you very much. And again, I appreciate everyone taking the time.
And thanks everyone for tuning in. Just a reminder that we'll be back again on Monday. So we'll have Red Cloud CEO Bruce Tatters. He'll be sitting down with Seabridge Gold on Monday, July 11th at 11 a.m. Eastern, 8 a.m. Pacific. That same day, we're actually going to have Dave Talbot sitting down with Azincourt Energy, one of Skyharbour's partners, and that'll be taking place Monday, July 11th at 2 p.m. Eastern, 11 a.m. Pacific. Thanks, everyone. Have a great day.